In this video, I will be teaching you the best price action trading setups that you can use to grow small trading accounts fast in a very short time. These strategies are very simple and can be used by anyone to grow their small accounts. It does not matter if you are a beginner or a pro trader. They are so simple that you can even start to apply them today and start making profits in your comfort. Follow me carefully as I unveil them, one after the other. But before we get into that, do well to like and share this video to help other traders find it and also become able to grow their small accounts fast, and subscribe to our channel if you are new here. Now, my tribe soldiers, let's get down into the business. Our first trading setup is called the uptrend setup. Even a 15 years old can master this strategy and buy his mama house with it. But first listen to this carefully though, so you don't feel jealous when a 15-year-old trader buys his mama a house before you do. When we're working with this setup, we want a fast and sharp price movement. The setup is formed by a higher high, a higher low and another higher high. This setup is much like a trendline setup which we can then connect our lines with. But when trading this setup, we are looking for a faster price movement. We want the price to move fast after we take a trade. So instead of waiting for the traditional trendline movement, where the market will cross into the setup and trigger a signal, we want the market to focus on the highs. So we draw our line on the last high and expect the market to return to the line. And from there we will find a signal and enter the trade. For this setup to work, we must make sure that the market did not trade below the line in order to guarantee us a fast price movement. And there is a way we can do that. We must make sure that the market moved a little bit above the line, giving a good space before retracing to the line, giving us a clear understanding that the market actually traded well above the line. And after it retraces to the line, we take a trade. Here is an example of this setup. So here you can see that the market formed this exact setup on the chart, a higher high, a higher low and a higher high. And before the market retraced to the line, see that there is a good space from the line, showing great market movement. And when the market finally touches the line, the price began to move up exponentially. The second setup will be the reverse of the uptrend setup, and we call it the downtrend setup. It has thesum structure, but in a bearish state. So we have a lower low, a lower high, and a lower low. And see that there is a good space between the current price and the line. So when it returns to the line, the price will trigger and fall massively. Here is an example of this setup on the chart. So here we have the exact setup on the real-time chart. We identify this lower low, a lower high, and another lower low. And after that, the market returned to the line. See that before the market returned to the line, there was a good space between the price and the line on the last lower low. And from there, it touched the line, and the market started falling massively. What you don't want to do is to use this type of setup where there was no good space between the price and the line, as that can indicate that the market is not yet ready to move further yet. Or it might just be another different setup on its own. So make sure you stick to the rules if you want your results to be faster. The next trading setup we are going to use in growing small trading accounts fast is called the breakout structure setup. This one is very popular, but many traders are still not making profits with it. The breakout structure happens when the market is about to make a reversal. So, when the market is moving in a downtrend and the market wants to reverse the market to an uptrend, it will first take out the last lower high and then return to a demand zone or an order block before pushing the market up. I have taught about supply and demand zones and order blocks in some of my videos, and if you don't know anything about order blocks or supply and demand zones, this is what you should do. You draw a line at the last low before the breakout structure and wait for the market to touch it. And there you find an entry. It's the same thing in an uptrend. When the market wants to change the market trend from an uptrend to a downtrend, you will see the market first of all break the last higher low in order to reverse the trend. causing a break of structure. Then it will go back to the supply zone or an order block area to gain more momentum and continue the trend. It's almost the same thing like I said in the other one. If you are a complete beginner that don't know much on order blocks or supply and demand areas, go check out my trading course on order blocks and supply and demand trading. But here is something simple that you can do with this strategy. You draw a line at the high, and then you wait for the market to return to that line, and there you find an entry. Although most of the time, the market will not touch that line. That's why you must equip yourself with order blocks and supply and demand trading knowledge. Here is an example of a break of structure setup. So here, the market is moving in a downtrend. And to reverse the market to an uptrend, the market had to break this last lower high. And when it broke the last lower high, it then returned to push the market up. Let's say we act more like a beginner and just place our line at this low. All we had to do is wait for the market to touch the line, and then we find an entry and enter a trade. Here is an example of the reverse of this setup. So here the market is moving in an uptrend, and to reverse the market to a downtrend, the market had to break this last lower high, causing a break of structure. And when it did happen, the market returned to gain more momentum to take the market up. And again, if we were not much into the knowledge of supply and demand or order blocks, we can leverage on placing our line at this last high. And when the market returns to touch the line, we find an entry and take a trade. The next setup that we are going to be using to grow our small accounts fast is the rectangular breakout setup. There are many types of breakout trading. We have the rectangular breakouts and the triangular breakouts. I prefer the rectangular breakout most times because it is more easier to trade and identify on the chart. All you need is a rectangular consolidating market going high and low at a certain area, and then you draw your rectangle on it, targeting the high and the low of the consolidation. The rectangular breakout can happen at both areas of the rectangle. We can find a breakout at the high or the low of the consolidation, but whichever way we find it, we must make sure that the market does one thing. We must make sure that the market breaks out freely and then retest the box before we find an entry. We wait for this in order to avoid false breakouts, because there are times when the market will act like it's going to break out, but returns back into the box and continues consolidating. To avoid this type of scenario, we wait for the market to break out freely and retest the box, and then we find an entry and enter the market. Here is an example of this setup on a real-time chart. So here, you can see that the market was moving up, and then it began consolidating, moving within a range as though the price is trapped in that particular price area. So we can draw a box on it, and after that we wait for the market to break out freely from the zone, which it did here, and after that, we wait for price to retest the box, and then find an entry before the market continues moving to our target direction. Remember that all these setups are to be traded only on the lower time frames, such as the 15 minutes, the 5 minutes, and the 1 minute time frame. If you are targeting to grow a small account, it is highly recommended that you trade the market with the lower time frames in order to minimize your risk, should in case some trades go against your plan. You don't want to go looking for these trading setups on the 1 hour or the 4 hours time frame and above. A small wrong move and your account is wiped off for good, so you should always stick to the lower time frames. Now, we are about to check out another setup, but before we do that, I would like to introduce you all to our Telegram channel, where I drop a lot of my trading signals and valuable trading tips that will elevate your trading game to another level. You can join us using the link in the description box below. Now, the next trading setup is called the Trendline break setup. This Trendline setup is expected during the early breakout of the Trendline. We want to take advantage of the first fruit of the trend break, and in order to get this breakout, we draw our trend line on a trending market movement, and then we wait for the market to break out of the trend line, and when it does, We want to see the market retest the trend line. And when I say retest, I don't mean those tiny retests that you see at the point of breakout on the trend line. We want to see a bold retest, such as this one, to retest the trend line, making sure it touches the trend line. And from there we can enter a trade and grow our trading accounts. Here is another example of this setup. So here we have the market ascending up in trend movements, and then we draw our trend line on it, and after some price action, it finally broke out of the trend line, and then we see the market boldly retesting the trend line, and from there we enter the market. Now, one thing about the trend line breakout is that you want to look out for small trending movement. Do not draw your trend line on large trending movements like this one, else you will be making a joke of your account. You should concentrate on the small trending movements, so that you can enjoy a faster and quicker price movement. All these strategies works very great in the market, and will keep working if you take your time to practice them thoroughly, and trade them with great entry candlesticks. The entry part is very important. And the truth is that not all candlesticks actually work for the entry part. You can't work with random candles in the market. That is the mistake of a beginner. It will only help in blowing up your small accounts fast, and even bigger ones. You must learn to use candlesticks that have proven to work multiple times in the market, and in this video I taught on the best entry candlestick that works for trading entries to help you grow your small accounts fast and profitably. Learn them and work with them, and you will find yourself making money with steez in the market. We are the Trading Tribe, and it's a wrap for this video. See you in the next one.